This week we're going to briefly review last week's supply-demand reports from the USDA. We're also going to take a look at weather patterns in Argentina where corn is pollinating as we speak, and wrap things up with a continued sluggish pace of U.S. corn export sales and shipments. Hi, this is Brian Basting with Advanced Trading. Let's talk about the corn market. We've moved in the middle of January, and always this corn market remains extremely volatile. Let's briefly backtrack a bit and look at last week's supply-demand report from the USDA. We're just going to look briefly at the supply-demand report from the USDA on the U.S. balance sheet. A couple things highlight here. The production number was way lower than expected, 200 million bushels below the November survey-based estimate. However, notice that the exports were also reduced by 150 million bushels. Combined with some small reductions in feed use and ethanol, basically the ending stocks were only 15 million bushels lower than they were in December. Here's the key message. Basically, there wasn't all that much change from where the supply-demand report was a month ago. So that brings us back to South American weather. Speaking of South American weather, let's focus this week on Argentina, where corn is pollinating. Let's take a look at where that corn is produced in Argentina. 4 key provinces here in Argentina where corn is pollinating as we speak, primarily in the south: Córdoba, Buenos Aires, Santa Fe, Santiago del Estero. About 80 to 85% of the corn. Let's take a look at the short-term weather trends. Our slides this week, as usual, are courtesy of T-Storm Weather. We're starting out here looking at precip over the last 30 days. It's kind of a proxy, if you will, for subsoil moisture across that area. Notice across those provinces here, a lot of red, i.e. it's dry the last month. So as we approach pollination, moisture reserves are not very high at the moment. Let's now move forward and look at rainfall forecast for later this week. This is Friday through Sunday. So there is a change in the pattern, at least for the short term here. In the pink, we're looking at some of those areas, 3/4 of an inch to 1.5 inches of rain. The green area is a bit lighter at 4/10 to 8/10. The key message, though, this is a weather market. Remember, actual amounts can be higher or lower than this, and the market is going to react to that in a sensitive manner. Let's wrap things up looking at precip over the next 14 days. Notice, in contrast to the last few weeks where we've been talking about a drier pattern, over the next 2 weeks, closer to a normal pattern in that area. Let's shift gears now and focus on the demand side of the equation, specifically looking at the pace of U.S. corn export sales and shipments. Now, we'll continue to reiterate that, but notice the year-to-date corn export sales here as of early January are considerably below where they were each of the last 2 years. Particularly notice there China, well below those levels. China is just beginning to take more and more corn from Brazil. So here's the key message to highlight. Despite the cut in USDA export forecast last week, the pace of sales and shipments is still below the revised level of 1.925, the forecast from the USDA. Let's wrap things up this week looking at trends in December corn futures. Now here we're looking at December 2023 corn futures near $6.05 a bushel. That's about $1.60 above the 5-year average for this time of year, and we still have 6 weeks before the crop insurance price is set. We strongly encourage you to work closely with your trusted risk management advisor to defend your balance sheet. Now, if you'd like more information, please feel free to contact us at 800-664-2321. We'll put you in contact with our risk management consultants. We'll be happy to visit with you at your convenience. And remember, we upload every Wednesday. Make sure to subscribe to our channel and never miss an upload. Thanks a lot. Have a good week.